We'll open up the floor for questions. Anybody have any questions or comments, things that you're curious about? I know we didn't cover it all. You can't cover it all in one of these, but we hit most of the highlights.
Mark, the question box is clear right now, and we have no hands in the air.
Excellent. Well, I'll sneak in a real quick commercial. One of the things that we are offering, and this is actually really becoming very popular. A lot of clubs are signing up for this. It's our all-you-can-eat offer for Manifest Investing. And again, we think we're a pretty good solution, pretty good set of resources for when you decide to kick off those training wheels. That's what we focus a lot of our attention on, not only just taking care of the relative newcomers, but also the people who want to stretch and grow as experienced investors. Your entire investment club gains access to Manifest for this for $219 a year. There is a Vivio price of $169 that we're running through at least through the end of this month. We do this one time, and you can access this offer one time. Every one of your partners gets access to the club, and just give it some thought, kick it around, and we'd love to hear from you. If you have any questions on it, send me an email. Pretty straightforward. You just pay us and give us your list of partners, and we take it from there. And we're going to continue to work with Vivio and our colleagues to build out presentations and learning materials that are also very relevant for investment clubs.
Mark, Teresa would like to know whether or not you'd be willing to share your opinion about the 5 companies they hold in the Northern Traders portfolio.
Okay, let's go back to the portfolio. Opinions on the portfolio. I don't know, Ken, what do you think? I'll put you on the spot. Do you want to share any opinions?
I like Aflac. I like Apple. I'm pretty neutral on Microsoft. Frankly, I have never studied Catalyst Health. It's a new name to me, and I just wrote it down on my pad here to take a look at it. I'm of the opinion right now with the education stocks, with the for-profit education stocks, and I've made this statement at a number of these things, that when the government gets involved, it's like a freight train running down the track right at you. And no matter if you're right or wrong, the train's still going to bowl you right over. And that's my feeling about the for-profit education stocks at this moment, that you're fighting an uphill battle with the government, and until the government decides what the rules are going to be, I don't think that you're going to be able to honestly evaluate these for-profit educational companies. So I'm a little bit negative on companies like Strayer and Capella and even APEI, even though I think they have wonderful business models and they're doing a very great job of putting the company together. They don't know what rules they're going to be playing by, and neither do we.
Yep, I think that's a fair statement. I mean, I would second 99% of what you said, Ken. I mean, I think this club probably accessed Aflac back in that swoon about a year ago, and we had a buying opportunity that we'll probably not see in our lifetime with Aflac again, and they probably bought somewhere in that time frame. I share the comments with the others. I'm in kind of the same mode on the education stocks. If this was mine, if you gave it to me, real money, and just handed it over to me, I think I would be really inclined. And again, if there are members of the club that are not familiar with protective stops, I mean, this is a young club, but it's probably not too early to at least understand the situation. I think I would be very motivated, again, if it was in my portfolio, to have a protective stop on American public education. I'm with you. I've looked at the company fairly carefully. Lori and I have exchanged a number of editorials and columns on the company. I think that they're well managed. I think Strayer is well managed, but it's kind of like going to a football game and the referees are running around on the field, and halfway through the third quarter they decide touchdowns are only going to be worth 2 points and field goals are now worth 5. That's not exactly fair to the teams on the field, but if the referees change the rules during the game, it can dramatically affect the outcome. And I think you have to be mindful of that with the education stocks. I think the train has already pretty much obliterated some of us, Ken. So I mean, the train has arrived. I mean, some of us that were in Strayer went from 266 to 115. You know, so that is also a part of the consideration. But again, even if it were Strayer, if that company were, if I were holding it and it ran up 40 or 50%, I think I would install that protective measure because, again, the referees are out there changing the rules. So
yeah, Mark Chuck Brunell has his hand up. I'm going to unmute Chuck. Chuck, go ahead.
Hi, Mark.
How you doing, Chuck?
Good. I noticed you've been using the value line low total return. Is that it?
Mm-hmm.
A lot.
Yes.
Is that going to eventually be replacing the MyPar?
It's in transition right now. We're just doing that as we collect the data. I think there will come a point in time where you can select either or. So we still have the PAR data, but I think that's probably what we'll do. So it's not meant to be a replacement. And what I'd like to do, Chuck, is just kind of direct the audience attention to a few months ago we actually did a story. You probably remember this one, Chuck. This is actually the new website. Let me crank up the existing website. If you go back to a cover story that we wrote a few months ago, I think it was this one, Better Second Opinion. Here we go. From the October 2010 cover story. One of the reasons that we're actually going through this transition or this analysis or research into this data point is because of what we discovered when we began looking at it pretty closely. And the bottom line here is that I think everybody here is familiar with value line. If you take a look at the value line projections in their annual total return box, this is what we mean by the low total return forecast, the 16. And what we have come to find, and the words are here on the page in this cover story, is that if you really have a fairly well-formed stock study, I want to say 99 times out of 100, it might not be that high, but most of the time, your projected return at the end of your stock study should probably resemble that number. I mean, if you come up with 6 versus 16, that's something you want to scratch your head over, or 30 instead of 16, you really should be in that 16 neighborhood most of the time. And the reason for that is quite simple. I mean, we all know that analysts in general, as we call them the rhinos, they tend to have a real optimistic bent to them. So that optimism creeps into their growth estimates, in many cases their profitability estimates, and in some cases their PE ratios. And a lot of times what we find is we go through and we condition a study. And when I say condition, I mean we take a look at the company, we bring the opinions of Morningstar, Value Line, S&P, and we kind of look at them as a collective bunch. By the time we're done saying, well, you know, Value Line thinks the P is going to be 20, but everybody else thinks it's going to be 16, and we start using that lower PE, what we find is the conditioning that's involved takes us closer to this Value Line low total return forecast. So that's why you see us using it. And it doesn't mean it's replacing anything. That's just a graph showing how close it's been over time. And this article just kind of goes through and talks about what we saw as we took a closer look. So no, it doesn't replace PAR. We think it's a nice complement, and well, just like it says right here, second opinion. Second opinion on the PAR, kind of a gut check on the results of any study.
Mark, can I weigh in just a little bit also?
Yeah, go for it.
Chuck, I've been doing a lot of the analysis on the smaller end of the scale, looking at the companies that aren't followed by the big value line, the value line 1700. And remember, first of all, there is no estimates like this in the smaller value line, the small and mid-cap edition. So you're skating all on your own when you're dealing with those types of stocks. And I am finding that as the stock makes a transition from the small and mid-cap edition to the larger edition, and I guess what I'm saying in code is the very, very small companies in the value line 1700, this analogy isn't maybe 99% true, as Mark was talking about, but it might fall to the 85 or 80% true.
Yeah, absolutely.
A little bit more of a disconnection between the small stocks, even if they are covered by the 1700. Value line tends to err on the side of conservatism, at least in my opinion, when they're dealing with some of these very small ones that they're adding to their groups. So that's a pretty complicated answer for a pretty simple question.
No, but it's a good one.
No.
It's a good one to point out. I do think that they tend to be more conservative at that end of the spectrum. Does that help, Chuck?
Yeah, I was something I noticed and I was curious about it.
Any follow-up? Or you want me to? Can I mute you, Chuck?
Yeah.
Okay. Okay. Mark, we have a follow-up from Teresa, and I think she misheard you, Mark, so you might have to repeat it again. She says, okay, I'll bite. Protective stock means what? And I think you said protective stop.
I did. A protective stop. Yeah, it's a stop, or what's called a stop loss order. And the one that we've explored in the Challenge Club, just as there's an example of a club that's exploring an educational topic. It's called a trailing stop loss, stop as an S-T-O-P, or a stop limit. All it basically is you put in a set point that if a stock drops X percent, some of you out there are probably familiar with the teachings of Bill O'Neill at Investors Business Daily. And Bill is in the momentum stock world. He tries to buy the hot stocks that are really taking off, but he doesn't do it without these protective stops, S-T-O-P, stops. And his standard is to sell any company that has an 8% drop in stock price just to protect himself. So that's what he uses it for. So again, we're going to cover this one in pretty great detail in a session dedicated to it, where we talk about Roman candles, cruise missiles, and ejector seats here pretty soon. So you might want to watch for that. We'll explain the method behind it, and I'm actually still trying to search for somebody to tell me, a good way to logically approach the setting of those stops. You don't want to set them too close, because then you'll sell stocks prematurely. You don't want to set it too far away, because then you don't have enough protection. What type of things do you have to be thinking about as you select the triggers for those protective measures? But again, in the case of, we were talking about it in the case of American public education, it is not science fiction that could drop, 50 to 60% in the matter of a couple of days. That's the type of vulnerability that you have, again, when the referees are changing the rules in the middle of the game. So, again, that's what you're trying to protect against without getting in the way, without interfering in potential rewards of stock price appreciation.
Mark, Teresa says she'll have to clean out her ears, and thank you very much.
No, it's probably my slurring. Battling a little bit of a cold, so you probably caught me on that one. Anybody else have any thoughts or comments? We're at 9:30.
Our question box is clear again, and there are no hands in the air at the moment.
Okay, we'll give everybody a moment.
Mark, Gene's hand just went up. Gene, you're unmuted. Go ahead.
Mark, quick sidebar question here on the groundhog contest. The upgrade or the updates for stock splits and things like dividends, is the individual responsible to post those? I mean, it's easy enough to do. Is that how it works?
You can track them, but we actually keep a master dashboard at Manifest Investing for all the groundhog participants, so I actually do that. We playfully say that there's an accounting team that comes in and takes care of that. But no, we do account for stock splits and dividends. I would encourage people to keep a dashboard on their own, keep track of that sort of thing, and watch for any large variance. There have been rumors that the scorekeeper makes a mistake every now and then. So
okay.
That's a vicious, ugly rumor that's never been substantiated. But
quick question for Lori.
Yeah, go ahead.
You talked about positive relative returns, and I know that Vivio has put out that they'll be willing to reflect those for you, but that's usually after the club is at least 1 year old. Is that correct?
Yeah, you need at least a year's worth of data to get a good number for that.
Okay. Thank you.
And if I could jump in just to augment what Laurie just said, when I visit clubs around this area, I like to talk about a 3-year number. I'm even a little bit leery about numbers that are at 1.5 years, 2 years, those kind of numbers.
Yeah, it depends on what the question is.
Yeah, it's all a context question. I agree, but I do have some concerns over the 1 year time frame could tug people's hearts in the wrong way, and we want to be careful with that. All right. Well, with that, if the question box is clear, hope you've enjoyed tonight's session with the Northern Traders. Again, I just want to emphasize these guys are really on the right track. Keep doing what you're doing, and lean on each other. Keep sharing those ideas. And the last time I checked, you guys were in second place in the groundhog competition. Now we're only a month into it, but I'd rather be in first place rather than 89th place, which, by the way, is where the Challenge Club Select is right now, thanks to Cisco and a couple others. But again, you guys seem to be firing on all cylinders. Keep doing so. And again, if you're out there and you're interested in attending one of the meetings online, give Lori a call. Lori, you want to share your email address or for any questions about it?
Yeah, we actually have a little web page. If you go to www.vivio.com/Northern Traders, you can see our web page. And you're welcome to come and listen to a meeting online. Just sign up there.
So it's a true open house situation if you want to just kind of look over the shoulders of a club that has a pretty nice track record, even if the race is just starting. The journey is just starting, but certainly starting on the right foot.
Yeah, one thing I was going to mention, we kind of pick our stocks kind of interesting way. We do what we call a group think. We kind of narrow down stocks we want to look at together, and we do kind of an anonymous collection of judgments on sales growth, and now we're doing net margin and PEs, and so everybody enters them online, and we go with the cumulative results from the club in terms of which stock we decide to pick if we're looking at an industry or something. So we've been doing pretty well with that, even though we have people that are brand new. But the idea is to get everybody to try it, and you can't really do anything wrong. But at least to get everybody thinking about making the judgments and what you ought to think about to predict sales growth and that kind of thing.
Well, I think that's the best practice, Lori. I mean, we did some group think type stuff back, 8 years ago at Better Investing, and it's just a matter of everybody does their homework, files in their results, and then you compare the results. And again, in some cases there are no right answers, but you can certainly look for ranges. And
it's fascinating how you hone in on things too.
Oh,
even
absolutely.
With people who are brand new, and our new people don't give themselves enough credit. They actually are really, putting a lot of effort in and trying, doing a really nice job.
Yeah, and in fact, I'll extend an invitation here in the next couple of days. I will be posting an analysis of Research in Motion, RIM, and Avery Dennison. And if you want to do a little stock study and then just compare your numbers with mine, just as a little exercise for people out there that may not have an investment club to lean on. We'll just lean on each other. Anything else, Mr. Kabula or Lori?
No, thank you. You did a nice job.
Well, thanks. And thanks everybody for your help. And with that, we'll let everybody go off, and I think American Idol's over, so I have to see if my girl won again, or if she's still surviving. So thanks everybody, and we'll just say good night. I'll stick around for a couple of minutes, but we'll say good night.